Welcome back to Investing Talk podcast.
Today we're looking at RCAT Holdings.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, let's unpack this company's transformation, because that really is the word for it. What stands out to me right off the bat is the money, the huge amount of capital they've raised.
That's where it gets really interesting. I mean, this is the inflection point. RCAT Holdings secured approximately, $172.5 million in gross proceeds.
And that was from a public offering in September 2025, right?
Exactly. And a raise of that scale. I mean, that suggests management is positioning for a massive multi-year growth trajectory. This isn't just keeping the lights on.
So what does this all mean for their strategy? They didn't just hoard that cash. They immediately pointed it at a new area, right?
Correct. They earmarked the net proceeds for a material expansion and not just, more the same.
A completely new area.
A completely new division, the Emerging Unmanned Surface Vessel, or USV division, which they call Blue Ops.
Okay, so that's the big pivot.
This is a greenfield market opportunity with potentially much higher unit economics than their traditional software and drone business. Management estimates something like $20 million to $25 million in total investment to get Blue Ops fully operational.
Which is comfortably funded by that capital raise.
Very comfortably.
That kind of capital raise, though, often comes with fear of, financial instability or massive dilution. But the balance sheet seems fortified.
Absolutely. They ended Q3 2025 with $212.5 million in cash and receivables. They also did something really smart.
Which was?
They retired convertible notes through an equity conversion.
Yeah.
So they created a very, very clean capital structure.
Right. Taking that overhang off the table.
Exactly. And the fact that sophisticated investors demanded the full over-allotment of shares in that offering, that's a really strong indicator. It's a huge vote of confidence in the plan.
Okay, so they have the money. But let's look at the operational growth that justifies this kind of investment. We're seeing some genuinely explosive revenue numbers here.
What's fascinating here is the velocity of the growth.
The speed of it.
The speed, yeah. Q3 2025 revenue was $9.65 million. That represents a massive 646% year-over-year increase.
646%.
Yeah. But, the real story is Q4.
What they're guiding for.
Exactly. Management has guided Q4 revenue to hit somewhere between $20 to $22 million.
Wow. So more revenue in one single quarter than they had ever done in a 12-month period before.
That's the inflection point. That's the whole story right there in one number.
And that growth is anchored in a critical area. They recently unseated a competitor for a key defense program, didn't they?
Yes, and this is crucial. They won the U.S. Army Short-Range Reconnaissance Contract, or SRR.
For their Black Widow drone.
For the Black Widow. That contract has already expanded to $35.1 million. This validation, coupled with their Blue UAS certification.
And the NDAA compliant manufacturing?
It creates a powerful competitive moat. They have the facilities, including a 155,000 square foot USV facility in Georgia, and they're expanding drone capacity in Salt Lake City and Los Angeles. You can't just replicate that overnight.
They aren't just selling one drone either. It's more of an integrated portfolio.
Right. If we connect this to the bigger picture, their strategy is all domain.
Air and sea.
Exactly.
Yeah.
They offer systems across air, the Black Widow, FANG, Air, NID, and now Sea, with Blue Ops USVs. They've also integrated with other defense players, like that partnership with AeroVironment.
To deploy the FANU drones from the P550 platform.
Right. It shows strong ecosystem integration. They're becoming part of the fabric of modern defense tech. And, the market perception signals are, they're overwhelmingly positive. This is being driven by institutional activity.
Here's where it gets really interesting on the sentiment side. The financing structures themselves, they gave off some really bullish signals.
I'm glad you brought that up.
Huh?
You have to consider the convertible debt holder, Lynn Global. They voluntarily waived their anti-dilution rights during that massive September equity raise.
That's a huge deal, isn't it?
It's a massive signal. That's a strong insider move. They essentially believed the raise would create so much value for all shareholders that they were willing to take the hit.
They were betting on the upside, not protecting their downside.
That's a perfect way to put it. Furthermore, you see institutional ownership surging to nearly 38% of the float. Major asset managers are accumulating positions. Smart money sees value here.
What about the analyst community then? And the recent price action? Because it did pull back.
It did, yeah. The stock pulled back after an EPS miss and a guidance cut. But The consensus remains buy or strong buy. Analyst targets are still pointing to significant upside.
And technically?
Technically, the stock appears to be, building a base. It's trading above its 50-day moving average, and it's important to remember the formation of that golden cross pattern back in Q3 of 2025.
Right, the 50-day crossing above the 200-day.
Which often precedes a multi-month rally, especially in small-cap growth names like this one.
Okay, so that's a lot of bullish sentiment. But no investment story is without risk. Given this rapid expansion, the massive capital injection, what are the primary concerns here? What's the bear case?
And this raises the most important question, execution. Can they do it?
Right.
RCAT is deploying a huge amount of capital into a brand new, nascent USV division, Blue Ops. If that division fails to achieve its revenue targets or, faces technical setbacks,
then that capital raise could be seen as value destructive.
Exactly. That is the primary execution risk over the next 12 to 24 months.
And we mentioned the incredible growth guidance, but there was also that recent bump in the road.
Yes. The company missed Q3 EPS consensus.
Right.
And, critically, they sharply cut their full-year revenue guidance earlier in the year.
Why was that?
They cited government budget delays. And that, well, it damaged near-term investor confidence. You can't just ignore that. Furthermore, they're burning cash.
They aren't profitable yet.
Not yet, no. They are front-loading R&D, which was $6 million in Q3, up 66% quarter over quarter. They're also building out that manufacturing capacity. It's all investment right now.
And what about other financial risks, like customer concentration?
That's a big one. Growth is heavily dependent on the U.S. Army and other government programs.
That dependent.
For the first 9 months of 2025, 2 customers accounted for 58% of revenue.
58%. Wow.
So while defense is a durable market, delays in contract awards or shifting government priorities, which we've already seen, can significantly impact near-term results. So in summary, RCAT Holdings is at a pivotal point, a really high-stakes moment. They have the balance sheet to execute, the revenue growth rate is exceptional, and they've secured a massive defense contract with the Black Widow.
But it all comes down to execution.
It all comes down to execution. Success hinges on management's ability to deliver on that aggressive Q4 guidance and successfully launch the USV division.
So for listeners, what should they be monitoring in the short term? What are the catalysts?
The immediate focus has to be the Q4 2025 earnings report. That should be out mid-January 2026.
And they have to hit that target.
Hitting that $20 to $22 million revenue target will be critical for restoring credibility. We also expect news on the SRR contract production kickoff, and hopefully some early product announcements from the USV division in the first part of 2026.
The company is transitioning from a speculative startup to a fortified defense technology platform. The question for you as an investor is whether the asymmetric upside from the USV expansion and that defense program ramp is worth the inherent execution risk.
It's a classic risk-reward scenario.
It is. If you want to keep track of these complex, high-growth companies, make sure you hit that subscribe button right now.